And we move on to this story now. The FirstRand group has benefited from the high interest rate environment and an uptick in the post-COVID-19 economy. It upped its interim dividend by 15% to 322 rands and 7 cents a share for the half year ended December, which was largely driven by new business across its lending units as well as higher deposits. But the FNB owners also warned that they remain cautious due to the worsening economic conditions in the country. FNB was last month named the strongest banking brand in the world, and we are joined now by the CEO, Jacques Celliers, to talk more about FNB's results. Jacques, thank you very much for your time this afternoon. Let's talk about the performance, the financial performance of the group, particularly when you look at commercial customers. FNB's South African client base now sits at 9.2 million, up 5%, with total active customers across the entire group also increasing. The highlights from your financial performance compared to last year.
Thanks for having me, Colin, and thanks for the viewers. I mean, it's been a wonderful 6 months for us as we navigate clearly an increasingly difficult, sort of climate. The fact that, as you say, our 11-odd million customers across the countries which we operate, and if you had to add the e-wallet base, that's up to about 18 million odd customers that we can solve and try and service with better solutions. I mean, a massive accolade for our clients to get. As a bank, you can't sort of wish to have a stable platform and make money if your clients don't make sense of their reality. So they really are the heroes of the 6 months, and it came at us from a number of fronts. I mean, first of all, obviously transactional volumes are up 15%. Our liabilities, which is the deposit franchise, grew 11%. Our advances grew 8%, and our customer base 5%. So it's really been an all-round very, very good and pleasing performance for us.
Really a good year for FNB. Let's talk about news that came in last week, which fall directly on your lap as a CEO of a bank. And we heard from Moody's saying that the grey listing of South Africa by the Financial Action Task Force is actually credit negative for banks. You are a CEO of a bank. What do you think, what are you most worried about when it comes to South Africa's grey listing?
Right, so the first thing to recognize, it's not new news for us. I mean, it's been coming for quite some time, and as we said this morning on the results presentation, we're really grateful for the leadership that Treasury and SARB and our regulators have given us and taken on this initiative. So we've, as the industry, really put our foot forward to make sure that we do our part as a financial sector to lean into solutioning for this challenge. But clearly there are lots of other parts of the economy and the society that must also play. And the big thing for us to get right is our legal system and our justice system to get some convictions out into the space. And holistically, we must try and work ourselves back 3-4 years from today to say we're off that list again. So this is a warning. It will have some some immediate impacts and some short-term frustrations, but a little bit more compliance on some of our processes. We'll try and minimize as much of that to our customers so that the clients don't affect it. But I think the longer-term confidence that we need to get back into people abroad supporting our economy is what's the most important thing to get right. So all of these things point to less confidence, and we hope that we can all work hard to get the confidence levels back. And I think our market and the participants have seen enough of that information to take it seriously.
Do you think we have, as a country, what it takes to make sure that we get off that list by January 2025?
I think we can do lots of things. I mean, if we put our minds to it. We got through COVID as a country. We got through lots of challenges in the past as a country, and I think we can get through this, but it'll need a concerted effort by all to play their parts. And so I think one of the nice things is that clearly we as an industry can play our part, but it will need a bigger effort from all stakeholders to play. And I think everyone knows more or less what that is. They must just get on with the job.
Jacques, what's the outlook looking like from your end when it comes to 2023 and the rest of the year?
Yeah, I mean, it's no secret to anyone that the big impact of the energy disruptions and supply chain disruptions, a consequence of, transport and logistics challenges, those are real things. What we also see is the exciting part of that is many people have I guess, pivoted to making sure that they take matters into their own hands and solve these solutions as opposed to wishing someone else will solve it. So as a business, we see lots of opportunity in this energy reconfiguration of the sector. Everyone from households to businesses has to reconfigure how they operate, and that's quite exciting because it allows us to lean in with advice and solutioning, so that's quite cool. The second thing is, I think the innovation that it requires, for us to deliver better service, to be trusted as a platform, to have our customers see us as very reliable in their lives. So while they have other disruptions, we shouldn't be a disruption for them. So that's quite exciting, and I think we'll continue to lean into the economy and into our clients to make sure that we help to help grow and be part of the solution as opposed to part of the challenge. So it's good momentum. We're on the front foot into a difficult climate. We've got amazing customers that keep on, I guess, surviving through whatever the world throws at them. So that's quite inspirational to watch. And we invite our customers to push us hard, to be there for them.
I would like to put you on the block. In the next couple of weeks, two important pieces of economic data are coming out. GDP next week. How do you think we would have performed in that particular fourth quarter? And the Reserve Bank, by the end of this month, will have their MPC meeting to decide on interest rates. We've seen inflationary pressures. Where do you think they are going to fall? No increase for this particular meeting that is upcoming, a 25 basis point or 50 basis point even?
Yeah, I mean, I think the bet there is a bet on at the moment, but I think the real message is we are at the top or near the top, if not already at the top. So I don't think that's a big adjustment to people's lives. I think the big message in it is that we're more or less back to where we were before pandemic. So our customer base is quite used to these sort of levels, and provided there's not a big scare from a global perspective or a geopolitical outcome that we're not hoping for, we can't afford. I think we should be in a good space to at least get some momentum and continue with some of the growth momentum over the year. So I don't think there's a major disruption to any of the macro messages. It is really going to be about how do we get some of the basics done in the country.
Jacques Celliers is the FNB Group CEO. Thank you very much, sir, for your time, talking to us about their great set of results and, of course, the grey listing matter and their results showing that they've added at least wealthier customers, which have hit 8 million, and their profit rising 16% in these latest results.